my father used to say this back in the day. He's like, always be grateful that you can pay tax. It's always bad if you can't pay the taxes. Then you know you're not making money.
All right. Hey, guys, welcome back to what's going to be another awesome conversation on whatever day this comes out. But we have these in studio here on Thursdays, and what a way to kick off the conversations that we're going to have today, the 3 or 4 of them, with someone from overseas again, a guy that's born in Canada but now is in Croatia. It's where his heritage and his family comes from. So today's guest is a global investment strategist, entrepreneur, and founder of Cohres. It's Cohres, a boutique investment research firm focused on helping investors, venture capitalists, and founders make smarter decisions in a world full of noise and hype, which we know there's a ton. Based in Europe, but with a truly global perspective, he's analyzed over 15,000 companies across sectors like AI, SaaS, and data, and brings lessons from the front lines of market research, due diligence, and founder psychology. So please welcome Daniel Nikic. Welcome, man.
Well, thanks for having me. It's a pleasure to be here.
Yeah, man. Where do you think we kick off the conversation? I mean, I know every day I just got finished listening to one of the largest podcasts in the world, and their 2-hour conversation was all about AI and really what's happening and the book that she just wrote and is it good for humanity or not? So I don't think we have the time to go deep in there. However, in your space, in your field of investment strategy, is AI a good thing, or is it some of both, good and bad?
Oh, that's a good question. I think AI is forcing individuals to be more efficient in what they do. In my opinion, I believe AI is getting rid of replacing, let's just say, the bot work. Because I myself use AI for some stuff, but I know it doesn't have the experience or expertise. Like, you have to either train it, because it's still augmented AI. So in other words, it's still AI that needs to be controlled, or let's just say mentored by a human. And I believe AI is going to take over quite a few jobs, but it's also going to create jobs. But is it going to create more jobs than what's going to take over? Probably not. But I think humans have always been resilient throughout history, and they'll find a way. Just look at the internet. How many people lost jobs because of the internet? But there's also the question, is it going to be used for good or used for bad? It depends what it's going to be used for at the end of the day. We see what's going on with cybersecurity, deep fakes. We see what's going on with the wars on TV. You don't know if it's real or fake today. You have to double guess and see what the sources is. So long story short, I think it's good if you know how to use it. It's bad if you don't know how to use it and you can't adapt.
Do you think there will be some byproduct that's bad that we don't have control over, right? I think this is the conversation that everyone would be okay with AI as long as we don't believe that it's going to take over all the thought and all the judgment and all the morality of the world. Right? I think we'd be okay if it's a resource that we use to be more efficient, to improve our skills, to outperform other people. Because right now we do that. It's higher education, the company you work for, mentors or leaders that you're around. There's ways to compound and level up your experience and your ability beyond other humans. So if we can use it for that way, it just shows up in a faster way. But we're concerned that it's going to take over the thought of the world.
Yeah, it makes you think, is it going to be like the movie The Terminator in some ways? But I think AI for business is going to be quite well, but I think a lot of companies jumped on the, let's just say, bandwagon of AI, or in other words, fear of missing out. Then they just said, oh, we're going to use AI, we're going to cut a lot of jobs, and they didn't use it efficiently. Because if you know what you want to use AI for, it's great. And Is it going to be used for bad? I can just say, for example, defense and military. We see what's going on in Russia and Ukraine. We see what's going on with Iran and Middle East. You're not going against a human. You're going with some drone who doesn't care, or vice versa. You can't tell a drone to stop or whatever.
So the question is it going to take over thought in general and just make humans the byproduct? I think if we could answer that question, I think we'd all be okay with it. But it seems to be, even Altman and all these guys who started these companies say there's a 10 to 25% chance there's a really bad outcome for humans. And so that's bad. Like if that was the percentage of an asteroid hitting us every week, I think we'd do something about it. So the question I have is, are humans even going to be relevant in the investment space and the strategy space in 10 years based on your projection?
Oh yeah, definitely. Because you still use human intuition to invest in a company if we're going to talk about the investment space. And a lot of times, based on my experience working with investors or even those who were previously entrepreneurs or founders that had to exit, they always say it's important to say what the leadership is and who the team is. Because, my opinion, the best entrepreneurs or founders or successful, I would say, owners are those who can deal with stress and volatility and being able to deal with humans. You're doing business with humans at the end of the day. It's not AI dealing with another AI and negotiating. It's human with human. So I think humans will always be important in terms of investment space. That's my honest opinion. Though the need to do some of the work that I had to do before will be decreased. Like before, AI is pretty much doing the basic copy and paste work I see right now. You still have to analyze it. Like I have an AI concierge thing for my investment research, but I still audit it. I still use it. I do the framework. I make sure that it's all according to what it should be. I don't take it at face value. And you always have to audit AI. And I think we've heard it from several people, like Sam Altman mentioned, auditing AI is important. And so, long story short, humans will always and still are important in investment space.
What do you think? You've researched, I believe, somewhere in the neighborhood, it's a crazy number of over 15,000 companies in the US and Europe. What's your big takeaway? And we're talking about here on interview. So let's act like you're not sitting here having this conversation with me. There's not people listening. What's your takeaway in your quiet moment about business, about strategy, about investments from all the reflection you have over 15,000? If you're sitting at a coffee shop or sitting and just wondering how it all goes together, what's your takeaway from evaluating all these companies?
My opinion is the most successful entrepreneurs can deal with criticism. They're not sensitive to someone saying, "Hey, I don't think you're going to succeed," or "This is a good job." They're persistent, very persistent, and I don't think passion is the right word. I would say they're disciplined. There's discipline to adjust to get that fundraising. Because there's some startups I've seen, they send their Excel sheet. I could have, like their financial, I could have done that in grade 8 math. So they know finance. They have to have some basic knowledge of finance because at the end of the day, you're dealing with business. You might have a great idea, but let's be realistic. Investors want to return their investments. They're not doing charity. You have to know finance somewhat. And the investors have to somewhat believe in you and somewhat like you. You have to make a good impression.
It's funny. I heard Richard Branson in an interview from, all his Virgin companies. Not to push back on what you're saying, because I process. You do have to know finance. You have to know cash flow. It's important to know net and gross. But what just went through my head, because I was agreeing with you, Richard Branson talks about this time that he was in one of his board meetings, and they started talking about gross and net profit. And one of the people in the room gathered really quick that he didn't know what they were talking about. So on the next break, he pulled Branson aside. He's like, "Hey, I'm not doing this to attack you. I want to help you, but do you know what a net profit is?" And he said, "No, I don't." And the crazy thing to me is he had built these companies without knowing that because he has dyslexia. But maybe that's another example of the elite other characteristics as a human that you have that will overcome some of it. So when I heard that, I went, how do you get that far with truly not understanding net and gross?
I think he's a great storyteller, though. Richard Branson, he knows how to storytell. And I never met the person personally, but you kind of get a image of the person that he's so laid back. He can deal with anything. He's not a stressful person. You don't see that he's anxious. He's like the type of person you want to go to have a drink with. Like you think you know you'll have a good time. So he's in some ways he's a good showman. And he's a good entrepreneur, but he can storytell and you feel like, wow, he really cares about what he does. And I think one thing that is important when you're saying, will AI take over what humans do? AI can't see if someone's very passionate stuff or like the emotions of what a person is selling. And yeah, there's voice AI. I looked at voice AI tech since 2018, and there is very interesting voice tech companies. When you see someone's expression, even the nonverbal, their face and stuff, you're like, wow, this person's so passionate. You're like, if I don't have any money, I think I could build something with this person. We could start from zero. And I think that's what he gives off in terms of that energy. And you do make a good point. Maybe the finance, as some cases are not, but they usually have someone who can help them with that aspect. Because at the end of the day, they have to know something, in my opinion.
Yeah. Yeah, you got to be able to pay your bills, and you have to be able to draw a line between some ROI for some investors if that's what you're doing, or at the end of the day, raise money, how to scale and grow a company. You need money to do these things. Give us some insight about investing internationally outside of our continent or our countries, because there's already a limited amount of knowledge around investment strategy in general from an average American. Let's just say that. Well, how should we process investment in Europe or in Australia, these other places? Because we don't even totally conquer it and know it here. Can you explain the difference, the positives and negatives? Because they're completely different markets. So what's different and what's the same? Explain this to us.
Okay. No, that's a great question. It kind of goes with social cultural factors. Americans, and I'm Canadian, so I know quite a bit about Americas, and I work with a lot of Americans. They're not afraid of failure. It's always been a country that's taken risks since the founding fathers, who came from England, Wales, President Wales, and etc. They came there. It was entrepreneurial, the gold mine, everything. I think American companies are very good at marketing. Like when you look at it, all these huge companies from states. You ask a kid in Albania, they know what McDonald's is. Like that's how strong marketing is in America, hence Hollywood. So I would say in America, the valuations are the highest, most of the cases. And overall, whoever I talk to from the Middle East, Europe, Asia, they're all fond of how Americans are willing to take a risk and not afraid of failure. And that's huge. Europeans are a bit different. They're more academic, I think maybe it could be from history too, World War I, World War II, because those all have factors, how someone's raised and stuff. It's also like, be careful, they're less willing to take risks, but they're very academic. They have one of the best R&D, I would say, institutions from Cambridge and also in Germany. Middle East, I think right now, currently we see there's an issue with Iran and UAE and the Gulf countries. But when I was there in Saudi Arabia and stuff, I feel like they're trying to find which way to go. They admire how business is done in America, but also they have their culture. You can jump in a call and be like, okay, let's talk business right away. It takes a while. They like to take their time to know the person. They have to build trust with you and stuff. And in my opinion, the quickest way to do business is America. The closest to America is probably UK. And then it's Canada, Australia, the Commonwealth countries, and then Europe. But a lot of the countries you would see with the founders, they get a business idea from either something they grew up with or the main industries that are in that country. So overall, To do
Yeah.
business, the quickest is in America.
Yeah, so then from an investment standpoint, it seems like there's a longer return horizon for companies that are outside the US. If they're going to be slower, if they're not going to be as risky, it seems like you're either going to have smaller return short term, and if you want a larger ROI, you're going to have to wait on a longer horizon, which means the compounding effect is reduced.
I agree with that, but there's also some cases where I say Sweden is an interesting country. Besides having great pop music in the past, it's also a country that has developed interesting companies such as, if I'm not mistaken, Skype. You see with Spotify, these are quite innovative companies. Like Skype was a first, like before Zoom and everything.
Yeah.
Like it quite changed how we communicate and stuff. We would be doing these podcasts via Skype 15, 16 years ago, right? And I think it's also, there are some cases where companies are quite innovative, but the thing with America is the fear of not failing. And fear takes away a lot of people from being so, but I see Europe changing. Like I would say Europe's probably 10 to 15 years behind America when it comes to investing and stuff in VCs. And also, we have to be realistic. America has the largest access to capital, the banking system, the strength of the American dollar. That takes a factor too, in my opinion.
So what do investors do when they're investing in Europe or the Middle East? What do you do? Like, how do you process, because on average, I think you go back 30, 40, 50 years, on average, the S&P has an average return of somewhere between 8 and 10%, I believe. It's somewhere in there. And if you just keep your investments and you just keep on rolling the profit over, if you do that, you can accurately predict over 20, 30, and 40 years on what that is going to look like. So if that's our metric, well, I could just invest in a you know, just an average fund, the S&P, top 500 companies, whatever it is. I can do that and I can get 8 or 10%, or there's this other investment that it appears the pro forma looks like it's 15%, it's 18% ROI. It seems like, am I going to be in bonds now? What are rates? What are the metrics in these other countries that are used? Is it based on what's the best return? Or is it more based upon just what you want to invest in because you like something? Because it seems like if it's just based upon the ROI, what's an argument we would make to invest in any of these places if it's not as predictable or is not as high?
Well, that's a great question. I think a lot of times the general public does not understand how many startups and early stage companies fail. I believe the rate's like only 8% go from Series C to Series A. But a lot of times these companies get acquired and then they're used as widgets for products. A lot of factors are taken in to get a return on investment is looking at the transactions and exits in that industry. So it's pretty much, if we're going to invest in health AI that's dealing with, let's just say, diagnostics, what companies have been funded in this industry? How many companies have been acquired or gone public? And you have to look at the rates and it's like, okay, we're going to invest in this. And I think it's somewhat of the process and the chase that a lot of these VCs, LPs, and family offices like, because the returns can be astronomical if you get it. And that's why a lot of these pension funds are limited partners into these VC funds, because it gives a bigger rate of return than, say, investing in the S&P and stuff, looking also in terms of inflation rate. So, in long story short, ROI is usually the main driver in terms of evaluating if it's worth investing in these companies. That's my honest opinion. People could say economics and stuff, but you can have a successful company out of Armenia and they could just move to Delaware and be an American company all of a sudden. And then you get a return of 10x. So I wouldn't say too much in terms of economics and stuff, to be honest.
Yeah. So it's the same metric that you're making an investment worldwide, pretty much. What's the
Yeah,
return going to be based on my investment, based upon the time horizon?
yes. And I think most people who are in investments today know this, but a lot of companies move to the States because they're looking to get an exit or acquisition or tax purposes, hence the great state of Delaware. And that's usually the case. And I've seen Israeli companies dealing with their accountants, just an opening, just to have a chance to get funded. Just to get funded, no guaranteed. So that's the power that America has in terms of the access of capital.
You touched on tax. We're not accountants and CPAs, so we're not going to give advice on it. But does it complicate a cross-border and a cross-ocean economics of investments?
I think so, but this one person, they were head of a banks in Australia and Oceania, and I had a meeting with him in Dubai, and he stated a great comment. And it was kind of common sense. Why would someone talk about taxes if they haven't made any money yet? And it's kind of true. First, generate the wealth, and they say you should generate the wealth where your domestic country of your company and stuff, or the market that you're trying to target. Then look into taxes and stuff. Take it step by step. You can't jump onto taxes and not generate wealth. And I think sometimes founders jump that too quickly. First, build a company, bring value. Then think about taxes and how to reduce costs. There's also a saying, my father used to say this back in the day. He's like, always be grateful that you can pay tax. It's always bad if you can't pay the taxes. Then you know you're not making money.
So you mentioned Dubai. You've been there and talking. Tell us about Dubai. It's fascinating to people who haven't been there. And as you tell us about it, tell me why I should or shouldn't go to Dubai and do business and look for business and networking if I've never been there or don't have connections.
No, that's a great question. So when I first went to Dubai, I didn't have connections. I went old school, cold contact, see if you're meeting, this is who I am, this is what I do. And obviously, I'm talking about Dubai prior to what's going on right now in the Gulf War. We don't know what's going to happen after.
It'll be back, but at some point it'll be back. Every war comes to an end.
I think so. I just don't know what the tax benefits in terms of financial situation, what's going to happen. But Dubai had a huge influx of high net worth individuals. I think one of the largest in the past in 2025. And when I was there, being that I'm born in Canada, I felt like it was like Toronto on a beach. Very multicultural. You could speak English, no problem. Everyone speaks English and stuff. And it's very easy to get stuff that you need. There's so many family offices, VCs, if they want to get funding, they usually have to open an office there. Because now they're like, we have a lot of capital. We can make it attractive. You guys come here if you guys are interested and try to hire people that are locally and try to invest in the local economy too. And a lot of the limited partners of a lot of these VC funds and et cetera are from the Gulf states who have oil money, et cetera. And the thing with Dubai, there's a lot of businesses there. There's a lot of international business people, but a lot of them say, if you want to make business here, it's about relationships. It takes time, trust, and everything. And that's kind of the social cultural factors. Yeah, it's multicultural, but it still has that, I would say, the Arabic social culture. They have to trust you a bit to get to know you, to see it. And they're very hospitable. I have to be very open. They're very hospitable. And they're investing a lot into AI and stuff, but it is an area that's driven a lot by foreign capital. But as we see a lot of foreign capital, like because of tax incentives and et cetera. And I think they had a very good plan in terms of trying to attract wealth there. And there's so many family offices that have there. They have so many events. They have like these free trade zones. They did it very smart. To be an efficient country that's small, I think the population is only 11 million, and only 10% of the population, give or take, are actually Emirati. So that's a huge statistic. So if you're looking for...
Yeah, who should go?
If you're looking for capital, and you need capital, you have a product, and you have something to stand by your word to be like, hey, I've done something, you can go there, and you're most likely will have to open a subsidiary there or something if you want to attract capital there. But it's still probably better than not getting a capital. And you will have probably a good chance of getting some investment. Obviously, if the product's viable and et cetera. But if you're coming with nothing and you don't have experience, you don't have the knowledge, I wouldn't recommend it because you have to bring some knowledge. It's kind of like it's a transactional relationship. No one's going to give you charity. And I think that's something that a lot of founders do not realize. You're getting money because they see value in it. It's a transactional relationship, and it's not for free. It's like getting a bank loan. The bank gives you a loan because they see some value. They have some guarantee to give you this money.
How are people internationally protected? Where we grow up and where we're from, we understand the laws and court systems and how to operate. How can people feel confident making an investment into a culture they know nothing about?
You have to have a local partner. You got to do your research. You have to do your research. You can't go blindside. Would you buy a car without doing some research? Would you look into buy a house, making it like that? You have to somewhat do your research. And I think a lot of individuals jump that gun. And I've opened a company in UK. I worked with a co-founding company in the States and also in Croatia. I did my research before opening. Okay, how is the process and et cetera? You talk to experts. You could talk to accountants. You could talk to lawyers. They're going to give you some advice because they want your business. If you're going to open it, it's common sense to them. And if you're going to invest in a foreign country, they usually say get a local partner. Like look at India. There's over 1.4 billion. But I've heard from a lot of people who are Indians or expats from India, they all say to me, if you're going to do business in the country, get a local partner who understands the social cultural factors, who knows who to talk to if there's a problem. You have to have somewhat of a contingency plan. It might be difficult, but it could be working with an international consulting firm or international legal firm if it makes it easier for the individual or team.
So when we're talking about making investments in these companies, whether it be a stock or making a seed investment in a startup, we touched on it a little bit, but let's go a little deeper. What signals as an investor and as a researcher really matter versus which ones are noise and irrelevant? Because I think that's one of the toughest things to cut through in the world now is whoever controls the narrative seems to be telling the truth, whether it is or not.
That's a great question. So I think when someone's going to invest in a company, they always look at the market. Is it going to be a market still in the next 5 to 10 years? Because the way technology is changing and pretty much revolutionizing industries, you have to be realistic. Like if you said to someone right now, hey, I have a company that does postal mail, you probably won't invest in them right now. Probably like, this is an old company. It's not relevant. So you have to look at the market. You have to look at the company itself. Because you hear a lot of companies, they say they're AI, da-da-da. Get someone who knows tech to check their tech. Do your due diligence. Don't skip that part and be like, oh, they got a great branding. Oh, it's going to go with that. We saw what happened with crypto companies. We saw what happened with a lot of startups of those cases. They just jumped the gun. They didn't do their due diligence. And it's just making sure you do your research and look at the finances. I remember I've looked at companies with investors. Great company, great tech, everything. We look at their finance. I'm like, this one company, they had immigration legal papers as R&D. I'm like, that's not R&D. That's your personal stuff. And the person's like, yeah, it is. I'm like, well, I'm an immigrant. I know it's not R&D for a fact. Like, you have to look in the details. I know it might be long and might be boring, but sometimes boring can save you a lot of misery in the future. And at the end of the day, if it's a VC fund, they have to answer to their limited partners, which are high net worth individuals, could be family and friends, and it could be pension funds, and et cetera. So I would say do your research and get expert advice if you need to, because I've seen investor venture capital funds, they outsource some of the stuff to the legal teams that they think can help them because they want to make a huge risk.
So you've said that investors should pay attention to how a founder handles stress, right? So how does the founder behavior based on how they handle that stress, how does that behavior impact long-term success beyond just product or growth numbers?
I would say today startups are a lot different than it was 5 or 10 years ago because startup teams are probably a lot smarter to get that certain valuation, right, with AI, but you're dealing with different people. You're going to have times that they're not going well. Look at every successful company. Tesla in the late 2000s. No one, you've heard stories about Elon Musk being like, hey, I had to take loans. We had like 2 weeks to survive. It could have been Facebook when they had to acquire another company. Are they willing to pivot? Are they willing to see how they can survive and grow continually? Because a lot of these companies, they constantly have to innovate. And it's stressful also to be like, hey, we got to change our plan. Or a competitor's coming in, or copyrights. How can they deal with criticism? And to be honest, you're going to deal with bad press. You like it or not, someone's going to hate on you. They're going to write, pardon me, a negative article about you. It could be, oh, this person does, oh, they did this, they did this. And in today's world, we see also with social media, you post something, you got at least 10 people who can't wait to criticize you. And I would say stress dealing with people, dealing with failure, not in dealing with times where you're gonna feel like the company's not gonna succeed. Because I think anyone who's been an entrepreneur has dealt with that. And my honest opinion, I've been screwed over by someone not paying me. I never met someone who's successful, who's an entrepreneur, that has not been screwed over, pardon my language, with a payment or something. I would love to meet someone who hasn't, and I'll be like, wow, you should be a template for how to be a because everyone who's gone through that, worked hard, completed a service of product, and they don't get paid, that's brutal.
Yeah.
Because you can't get back time.
Yeah, there's a lot of investors that I talk to that unless someone has a story of failure and having to push through significant stress, downside, unease, they won't invest in them. So even though there might be those unicorns that you talk about that never dealt with that, they won't invest in those people because they know inevitably, to your point, tough times are going to come. And they want an example of the people that are going to push through instead of wilt and go home.
No, I agree with that.
Yeah, it's essential. So you emphasize network and credibility of people and do our research, people and companies. What are practical ways founders can build trust with investors before a pitch? So we talked about going to Dubai. You need to have something. And you said, hey, it's about building a relationship. It's not just there. I think all this spectrum that we're speaking to is about, you said Richard Branson tells a good story. That just means he's a good salesman, right? And he's able to sell his idea to employees, to investors when things are tough. Keep going. We're going to find a way. So, but what are people, everybody wants to raise money. So what are practical ways the founders can build trust with these investors before the pitch?
That's a great question. I would say have obviously a demo if they don't have a full product out so they can show what they're doing. And a lot of times I remember there was a very successful individual that I worked with and they were an investor. They said, I want to know the problem and how they came to the idea of this solution. If it's just copyright, they're not going to be, I'm not too interested. They're like, I'm willing to forget about it. I can sleep at night. Because if they came with the idea through experience, then they know the solution that's needed. So they have to have a problem solution, what the idea is. I would say also what's very important is, do they have some, if possible, already users that can back it up to be like, hey, I've used this, it's quite interesting, da da da. And do they have a plan to pivot if things go wrong? Because I've seen some entrepreneurs, they got drilled. I was part of a startup that didn't succeed and we got drilled and stuff. They're like, oh, why should we go with you? What if this happens? How are you going to pivot? What this? And you have to have an exit strategy. What's the goal? Do you want to be a company? Okay, then we invest in you guys. We sell to a secondary fund because these investors want to know what your exit plan is too.
Well, it's interesting in this conversation, all the research you've done, researching these 15,000 plus companies. What makes you passionate about this area and space?
In terms of investment research?
Yeah. And what you're doing on a daily basis and sitting here and talking about it.
I think it's since I was a kid. Like I was really into sports. If you ask me about hockey, basketball, I would look at which college they went to, where they played. I've always liked numbers. And I always liked, okay, how does someone get to this point? And I'm the type of person who can watch the news, not politics, but like what's going on and stuff. And I was always curious about how does someone do something? Not in terms of how much maybe this isn't right to say. I really don't care what someone spends on their daily. I could care less if someone has a Ferrari. Good for them. I care about, if they have a business, okay, how did they come with the idea? How did they deal with this? How did they deal with this? And with investment research, it's never boring. Every day is different. I'd never had one day similar to another day. And I started off in accounting. So those who know what accounting is, debit equals credit. And plus you have to ask someone to give invoices and you'll know if they're lying and stuff. That's stressful to me. I would never deal with that. And I think it's the process. You see what's going on. You see what's the changes that's happening. I remember I first looked at AI in 2018. There wasn't that much information. Yeah, I've seen some quantum, some spark words. It's still SaaS, very popular. And then once ChatGPT came out, boom, everyone's talking about AI. Da 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 da. And it's interesting to see trends and interesting to see how the world is connected. We like it or not. This is what's going on with Iran. It's impacting the whole world. What happened with Russia and Ukraine? It's impacting the whole world. What's happening? People could say, for example, what happened in Louisiana when there was the oil leak with British Petroleum, that affected the world. People don't realize it, but these events have impact. And it's interesting how stuff can impact. And long story short, I think for entrepreneurs and even those who have success stories, I don't think we should criticize if they did it the right way. We should be like, wow, they had a great idea. Kudos. They're willing to take the risk because it's easy to criticize unless you've been in that position. And I think sometimes people have to somewhat self-assess themselves to be like, this person did this job, or even if they failed, they took the chance, they took the risk, they did the hard work. And I don't think that's respected that much in today's world.
Yeah. In business, one of the most difficult things, the reason why I've identified most businesses fail is because they don't do enough business development, business prospecting. They're not out searching for clients and selling on a daily basis. Because if you're willing to do that, it really is a top of funnel numbers game, running CRMs, creating relationships. There's a lot of people who have won with products that I feel like it's a mediocre product, but they built a network of customers, relationships, networking. What do you do that on a daily basis? We're sitting here having this conversation. This is one form, but what do you do on a daily basis as you, the entrepreneur, to build your business? What have you found most important, and what are the daily activities and hacks that you're working on?
Well, that's a great question. So when I first started my company, I had to get used to rejection. So this is back in 2014. I'm calling, emailing, getting rejected. I think I got rejected by over 10,000 people. And you have to be able to deal with rejection. When you get rejected, you're used to it. You're like, no, okay, thank you, have a great day. They could be like, you're an A, okay, thank you, have a great day, all the best. You don't take it as personal criticism because they don't know you. But what I learned you have to be able to market yourself, especially as an entrepreneur. And it took me a while to get used to it. I'm like, how can I market myself? Okay, I'll write about what's going on in the markets. I'll do research. And you have to be able to give free samples. You've heard of Gary Vaynerchuk, right?
I had dinner with him about 2 months ago in New York City.
Well, you could tell him his story if you ever.
It was through another connection. There was 12 of us, so he didn't know me beforehand. But yeah, it's funny. We put out some social media yesterday where he's sitting here talking to me, and I'm staring at him like it's funny. So yeah.
So this is back in 2015. He mentioned some people have to give their head, they have to be realistic. Why would someone want to work with you if they don't know you? Offer them something free. And then I did that. Give free samples. Hey, you want to see a sample work that I'm doing that could be of interest? Here you go. Here's a free sample. Tell me what you think about it. You like, okay, let's talk. You kind of have to get people to give something free to want. It's kind of like freemium. And we see with a lot of products on the internet. And first, you have to be able to give samples. You have to be able to contact. You have to deal with rejection. And you have to market yourself. And I always say this, stay away from politics and religion unless you're not making money off of it. Because you know who you're going to offend. And at the end of the day, if it doesn't pay your bills, it doesn't matter. Because in my honest opinion, at the end of the day, people care about being able to feed themselves and their loved ones. Because if you can't do that, then you're dealing with real stress, in my opinion.
So to market and brand, and you had to learn that. And it wasn't comfortable, right? You had to really step outside of your comfort zone.
Oh, it was brutal. It was brutal. Like there were some days, like I talked to him, there's some days you feel like the biggest loser. You're like, I am a loser. I can't do this. But some days you're like, I am Rocky Balboa. I could take on anyway. And I don't know how you feel, but the first client you get, it is the best. It's like you win the Stanley Cup, the Super Bowl. It's amazing. In my opinion, the first client, it could be like for $2. Who cares? It's amazing because you did it. It's no one helped you. Well, it could be from reference stuff, but they wanted what you offer. You can't buy knowledge. You can't buy intelligence. You have to earn it. And that's the great thing about it. When you're an entrepreneur, you build something and someone gets it, you're like, wow. And it could be a team. It's the best feeling. Whoever I talk to is an entrepreneur, they say that they all remember their first sale
Why do you think that was special?
because it was kind of like you, maybe it's kind of, I think all entrepreneurs are like this because they love their job. It's kind of like a child to them, but it's kind of like, it's a validation thing. It's like someone in the world values what I'm offering and they like it. And it's a respect thing too. If you ask anyone, I think the respect is so important. And being an entrepreneur is someone willing to take their money to buy what you're offering is a big like, wow. And I think it's also a good sign of all the hard work you did is paying off.
What do we need to do to maintain that same level of excitement and satisfaction as we get into the mundane, everyday, cyclical production of our businesses?
No, that's great. I think it goes back to what I said before, being able to manage stress. Because what I went through, it was stressful, getting rejected and stuff. And you have to go in with the Monday with a clear head, be like, I I know it seems, I don't want to sound negative, but expect bad things, but make sure what's your priorities. It could be health. It could be that person that you love are healthy. It could be like, I got my 7 hours sleep. Whatever is the most important, and everything else will be done well. Because I worked with great entrepreneurs, and the way they've been able to deal with stress, I was like, you can call me 24/7 because you taught me how to deal with stress. That goes in my personal and business life. That's so valuable. So being able to go on a Monday, be like, hey, I can expect it to be a stressful day, but you know what? I can find a solution. That's very important.
Who's Daniel's ideal client?
Well, family office or a venture capital fund that values research, that they use research to make investment decisions. That's my ideal client.
Did you design that, or did that evolve that was necessary to focus on that being the ideal client? Did you set out that was it, or did that evolve?
That evolved. I pivoted because I did a research on family offices for a company, for a publisher in 2016. Before it was just it was actually financial management initially and some research. But I got more clients doing research, and I did a research for a company that dealt with family offices, just analyzing them, and then that opened my eyes. I'm like, wow. Then you
Tell
see,
us tell us what a family office is.
okay, family office is usually the case. It's a high net worth individual. Let's just say they invented this pencil and they sold hundreds of millions. And they're like, you know what? I got all this money. I have children, but I don't know how they're going to deal with the money. I want to make sure the money's generational wealth. And usually they need, if I'm not mistaken, over 50 million in assets or in liquidity. And then they build a family office and invest in companies, or sometimes they own shares in like legal companies, accounting firms, philanthropy, and et cetera. And what I've noticed, a lot of these family offices, they have one company that does investment, then the accounting company that they own does accounting for this investment office. It's like a domino effect. It's all connected. It's all circling. And it is where you see where a lot of money goes into the world. Bill Gates and his former wife, they had the Bill Gates and Melinda Foundation. That's their philanthropy. There's so many, I would say most of the successful business people that we see today most likely have family offices.
It's just a way that they're making investments and allocating capital, right?
Definitely. And it's so they can secure their generational wealth. It minimizes tax liability too. And they have real estate companies and stuff. I think you see in the UK, you see UAE, there's a lot of family offices that went there, Singapore.
The what about this part of this coming into the conversation? What didn't we talk about? Like, because I got this picture of Daniel here in the black suit. He looks like James Bond coming from Croatia. What's on your mind right now in March of 26 that we didn't talk about?
How the future of the workplace is going to be. I think what I see with investing in a lot of companies, I look at, for example, someone was talking to me about real estate. Why is it important that some companies still have offices and stuff? I'm like, it's a domino effect. These banks are backing up, and like these real estate developers, and hence JP Morgan has that new headquarters in New York City, Manhattan. And how much the workspace is going to change, and how much our companies are we going to see 1,000 people, companies that are in the service industry or product? Or is there going to be maximum maybe 100? I think that's going to change rapidly, because it was interesting. I'm a big fan of history, and I believe in the late 50s, Detroit was the richest city in the world. And you see how much the workplace has changed with the auto industry and stuff like that. What will will there be more entrepreneurs and less big corporations? And think that's probably going to be the path, especially what we see with AI agents. You could build the app in like a few days if you want to. So I think the workplace is going to change rapidly. For better or worse, we'll see. But I think it's definitely going to change.
Yeah. Do you think that these things are, how tough is it to predict these outcomes?
Oh, it's difficult at times, because a lot of times I looked at companies and I'm like, you know what, I think they're going to be successful. Boom, they get hit by, it could be a competitor coming up, because when you said looking into companies to invest in, it's good to have traction. So that means have some customers, or have letter of intents of potential customers that want to work with you when you release a certain product, because it's so difficult to get that. And I really do respect anyone who's building something, because it's extremely stressful, because you're thinking about work 24/7, but it is extremely important to have that.
This is a good conversation. Family offices, philanthropic organizations that are looking to make investments. It sounds like Daniel Nikic in Croatia is your dude.
Thank you.
Wait, when did you leave? We're wrapping this up, but when did you leave Canada and go to Croatia?
So I finished university in 2009. I went to Brock, and I was 21 years old. So I'm like, oh, I'll see how Europe is. Why not? 21. And then I ended up staying, but I did not think I was going to stay. I was again, I ended up staying due to personal reasons, and I don't regret it, because who knows how my life would be. And I think you can't live life with a regret if you're doing the right thing at the end of the day. And I probably wouldn't be an entrepreneur today if I didn't do that.
If you're doing the right things, you don't have to live with regret. That's a great way to end the conversation. Hey, what's the one place that people should come and engage with you? LinkedIn, a website, a social media? What's the one that you want to direct them to?
They can check out my website, where they can see, because I post blogs and podcasts I've been on, and they can see my background work, which is danielnikic.com, or they can go on my LinkedIn. I usually post some research that I've noticed, like about recent news that's interesting, give takeaways, what's going on. So they can also reach out to me there too.
Awesome. Hey, Daniel, thanks for giving us this time and giving us a little bit of an exposure to what's happening internationally with investment, and if we should go to Dubai or not, about entrepreneurs dealing with stress, and just act the right way, do the right thing. You're not going to have to worry about regrets. That's an awesome way to leave this, man. Thank you for joining us.
No, thanks for having me. It's been a pleasure to talk to you.